Good morning, viewers. In the last class, I told you about this single entry system. Now, after single entry system, I'm going to the receipts and payments account. That is, accounts from non-profit organizations. That is, service organizations. When we take into account, we come across three types of businesses: trading businesses, manufacturing businesses, and service businesses. Trading businesses. What do you mean by trading business? Trading business is nothing but purchasing goods at one place and selling the same goods at another place is nothing but trading. Okay, there are trading businesses. Some people they'll do trading businesses. Next, second thing is manufacturing businesses. They'll manufacture the final products from rock to cream, from raw material stage to finished stage. They'll manufacture and they'll sell. Okay, so that type of businesses will call them as manufacturing businesses. Then service businesses. They'll do service. That is, profit is not their main motto. Service is their main motto. For example, if you take into account colleges, hospitals, clubs, schools, they won't manufacture the students. They'll help the students. They'll serve the students. So, service organizations. If you take into account the RTC people, the RTC people, they won't produce the passengers. They won't sell the passengers. They'll do service to the passengers. They'll take the passengers from one destination to another destination. So, like that, they will do serving. Okay. So, service organizations you'll come across, and these organizations also they will maintain the accounts. Okay. Why? Why they have to maintain? In order to, whether we can elongate or whether we can proceed further by doing some service. Okay, we are not satisfying with this type of people only, and we are not providing these people only the services. We have to elongate. We have to elongate our services to different people. With that opinion, with that motto, they'll do some services. So that type of businesses also they will maintain the accounts. And why they will maintain? See, when we are doing some service, whether we will come across any surplus or deficit. Okay, surplus or deficit. So, what is surplus and what is deficit? Surplus is nothing but profit. Okay, in ordinary man's language, surplus and profit they are one the same. But when you take into account the accountancy topic or accountancy terminology, profit and surplus they are entirely different. Profit is nothing but the additional amount over and above whatever you have spent. Okay, surplus is nothing but leftover amount. If you spent 100 rupees on a work and when you return, when you get back 120 rupees, that 20 rupees is nothing but the profit. Because whatever you spent 100 rupees, you received that, along with that you received 20 rupees extra. So that is nothing but profit. So there is lot of difference between profit and surplus. In common man's language, both are one the same. But when we go for accountancy subject, they are entirely different. You will come across a feather type difference. Surplus is nothing but deficit. So how it is? Suppose if you are having 100 rupees and if you want to spend 100 rupees on a work, but when you are spending by your luck, it had gone to 80 rupees. So 20 rupees is remainder or it is left over. So that leftover amount or remainder, we'll call that thing a surplus. Deficit. Okay, it is equivalent to loss. It is equivalent to loss. So whether we are going to get surplus or deficit, people they have to look after. Because when they want to prolong the services to some other people or to some other sectors, they must know whether we are in good condition or whether we are in bad condition. Say for example, if they are in surplus, they can extend, they can elongate the services to other sectors or to other people. If they are in deficit, again, first of all, they have to cover the deficit, then only they have to think about the doing of services to other sectors or prolonged sectors. So, this is how you will come across the difference between profit and surplus, deficit and loss. Okay, when you come across loss and when you want to when you want to convert that into a profitable stage, you have to take some other person's help. So deficit also in the same way. So deficit or loss, they are one the same. Surplus and profit, they are entirely different from one another. That is the main thing that we have to observe in this non-profit organizations. Okay, there are non-profit organizations around us, not only trading, not only manufacturing, but also non-profit organizations or service organizations. So here, when you go for this type of organizations, whatever may be the terminology that you learnt in accountancy subject is entirely different. Is entirely different. Okay, and when you go for trading businesses, you will prepare trading and profit and loss account and balance sheet. And when you go for manufacturing businesses, you have to prepare manufacturing account, trading account, profit and loss account and balance sheet. But here in non-profit organizations, you have to prepare receipts and payments account and income and expenditure account. Okay, what are the receipts that we receive? What are the payments that we have made? Receipts and payments account, they are equivalent to the cash book, whatever we learnt in our early stages. In cash book also, you won't write debit credit, you'll write receipts and payments. So whatever it may be, the cash that you received from whomever it may be, from whatever it may be, you have to show that on the receipt side. Similarly, whatever it may be, the payments that you have made, you have to write on the credit side. So receipts and payments account is just comparatively, it is nothing but the cash book. And from this receipts and payments account only, you have to prepare the income and expenditure. Here there won't be any trial balance. Here there won't be any preparation of trial balance. You will come across only receipts and payments account and income and expenditure account. So all the receipts you have to show that on the income side, and all the payments you have to show that on the expenditure side. Sir, when we are preparing income and expenditure account, what receipts what receipts we have to show, what payments we have to show. When you are preparing income and expenditure account, one thing you have to keep in mind is whatever it may be the current income, current year income, you should not take into account the previous or the coming year income. What is the present year income that we are receiving? That thing only they have to take into account as income. Similarly, what is the current expenditure that we come across? The expenditure of last year or the expenditure of future coming year, you should not enter. You have to take into account only the current year receipts and current year payments. Okay, and thereby you will come to know about the surplus amount or the deficit amount. And this surplus amount or deficit amount you have to transfer to balance sheet. Okay, even non-profit organizations also they will prepare the balance sheet in order to know the financial status, financial position. Okay, so there they have to transfer this surplus to the capital fund or balance fund. That's why I told you in the beginning that you'll come across a different terminology in this non-profit organization. In this non-profit organizations, you'll come across a different terminology. Okay, so first thing is subscriptions. Subscriptions is the amounts that are paid by the people who are the members of the organization. Compulsory amount. Compulsory they have to pay the amount. And this is nothing but one of the important income of non-profit organizations. Next, life membership fees. Okay, life membership fees. Some people throughout their life they are the members. When they want to become the members of an organization throughout their life, then they will pay the life membership fees. Similarly, entrance fees. Entrance fees. When you want to enter into any organization, you have to pay some entrance fees. Okay, so that entrance fees also you have to take into account. And coming to the other aspects, tournament fund. Some organizations they will conduct tournaments. Okay, for that they will keep some amount aside. That is nothing but tournament fund, and they will conduct tournaments. And what is the expenses that they incur? They'll take into account that thing. If tournament fund is more than tournament expenses, the difference what they will do is they'll show in liability side. That's tournament fund, remaining tournament fund. If tournament expenses are more than tournament fund, then they have to show that in income and expenditure side. So that is main important. Lecturer hall, rent of lecturer hall, honorarium. This is one of the important aspects. Honorarium. Honorarium means out of, okay, interest, out of interest, respect, will give some amount. So that is nothing but honorarium. He is not a permanent employee. He just come for one time or two times. So for that visit, we'll pay some amount. We have to pay some amount. That is nothing but honorarium. So this honorarium also we have to take into account. Legal expenses. Okay, they have to go for court and they will incur some legal expenses. That legal expenses also they have to take bear. And sale of grass. Okay, sale of grass, sale of old newspapers, sale of furniture. So all these things are nothing but the different terminology that we'll come across in income and expenditure. And once again I'm telling you that the current year income and the current year expenditure only they must be taken into income and expenditure. Okay. Then after that we have to go for balance sheet. Okay, preparing balance sheet is one of the important things for non-profit organizations also. Why? In order to know their financial position, how their financial position is, whether the assets are equal to liabilities, okay, or not, whether they are more or whether they are less. So in that case, what we have to take, what we have to do. So all these things they have to take into account. For that they will prepare the balance sheet. And one more thing is, you have to prepare an opening balance sheet also. Sir, why we have to go for opening balance sheet? What for? In trading organizations and manufacturing organizations, you will come across capital. But here, we should not call that thing as capital. We have to call that as capital fund or balance of fund. In order to find out the capital fund or balance of fund, we have to prepare the opening balance sheet. That is, in the beginning only, they will prepare this balance sheet in order to find out the capital fund or balance of fund. So once if they prepare this, automatically the same amount will be taken in the balance sheet at the end of the year. So this is how you have to take into account, or you have to remember. Okay, this. Next, another thing is, you will come across some expenses. Okay, we will come across some expenses, and in that expenses, we have to take into account the current year only. I told you already. Okay, what is the amount received? People they won't give importance for the amount received for the expenses. How much is the opening balance? Whether opening balance is there, whether closing balance is there, okay, how much we have to pay to creditors, how much amount we paid to creditors, all these things we have to take into account. Then only will come across the expenditure to be shown in income and expenditure account. In the same way, subscriptions. Okay, with subscriptions, when we are receiving last year's subscriptions, we have to take. And in the coming year subscriptions also, some people they will pay in advance. So that thing also we have to receive. But when you are preparing this income and expenditure account, mind it that you have to take into account only the current year subscriptions. So what is the received amount, and in that what is the previous amount that was included, we have to deduct that. Similarly, what is the coming year's subscriptions that is paid in advance, that thing also we have to deduct. And what are the outstanding subscriptions that we have to receive in this year, we have to take that and we have to add that. Then automatically that amount only we have to show in income and expenditure account. Next, okay, some people what they will do is donations. They'll donate money. Here when you go for donations, you will come across two types of donations: general donations and special donations. General donations, for generally they will give. Okay, special donations for a particular purpose only they will give. I give a small example. When you go for Ganesh Chaturthi, some people they'll donate money. Some people will ask, sir, we are conducting this Ganesh puja and other things, you please give some amount as donation. Without specifying, if you give some amount, it is nothing but general donations. Some people what they will do is, especially for distributing food, అన్నదాన సంతర్పణం కోసం మేము ఇస్తున్నాము అని చెప్పేసి కొంతమంది ఫర్ ఫుడ్ డిస్ట్రిబ్యూషన్ దే విల్ పే సమ్ అమౌంట్, and they people, the organizers, they have to spend that money for that purpose only. Some people they will give the money for decoration purposes, electricity decoration purposes. So they have to specify and they have to take that amount, and the organizers they have to use the amount for that purpose. So here it is like that. Donations also one of the important thing that we have to consider in this income and expenditure. And another thing is, in some problems, when you are going for problematic portion, half of the amount is to be capitalized. Like that, they will give in adjustments. Half of the amount, that is, we have to take into account the amount, whatever it is there, and half amount we have to take away. That is, we have to show that in balance sheet. And remaining amount only you have to show that in income and expenditure account. This is a very, very important thing that you have to remember. Similarly, depreciation. See, depreciation, when you are going, there should be the particular date. There should be the dates, and the dates must be given. If you purchase an asset in the middle of the year, there you have to take into account what is the date, on what date we have purchased. Okay, like that you have to take and you have to calculate the depreciation and you have to deduct that. Suppose if you are having an asset right from the beginning, and then you have to take into account the full year depreciation according to the rate that was given to you. So this is how you will come across the accounts of non-profit organizations. So thank you, and if you like this, please subscribe to my channel. Thank you.